In today's fast-paced and technologically advanced world, the internet has provided new and exciting opportunities for investment. This essay will discuss the most profitable and reliable investment options available online, the risks and benefits of each, and provide guidance on how to start investing in these opportunities. Examples of online investment options include stocks, cryptocurrency, peer-to-peer lending, real estate crowdfunding, and Forex trading. 1. Stocks. Stocks represent ownership in a company, and investors can buy and sell these shares on various online platforms. The primary benefit of investing in stocks is the potential for high returns as companies grow and increase in value. However, there are also risks associated with stock investments, such as market volatility and the potential for company-specific issues like poor management or financial instability. To start investing in stocks, beginners should choose a reputable online broker, consider the minimum investment amount required, and diversify their portfolio by investing in various industries and companies. Additionally, investors should carefully research and analyze the companies they are interested in before making any decisions. 2. Cryptocurrency. Cryptocurrency is a digital or virtual currency that uses cryptography for security and operates independently of a central bank. Examples include Bitcoin, Ethereum, and Ripple. The primary benefit of investing in cryptocurrency is the potential for high returns, as some cryptocurrencies have experienced significant growth in recent years. However, the risks include extreme market volatility, regulatory uncertainty, and cybersecurity concerns. To start investing in cryptocurrency, beginners should select a reputable exchange, research the different types of cryptocurrencies available, and invest in a secure digital wallet to store their assets. 3. Peer-to-peer lending. Peer-to-peer, P2P, lending is a form of online investment where individuals lend money to other individuals or businesses, typically through an online platform. This type of investment offers the potential for attractive returns as interest rates can be higher than traditional savings accounts or bonds. Risks include borrower defaults, platform failures, and the lack of liquidity. To start investing in P2P lending, beginners should choose a reputable platform with a solid track record, consider the minimum investment amount, and diversify their loans across multiple borrowers to reduce the risk of defaults. 4. Real estate crowdfunding. Real estate crowdfunding allows investors to pool their money together to invest in properties, either through equity or debt investments. This type of investment offers the potential for attractive returns and portfolio diversification. Risks include the illiquid nature of the real estate, potential property depreciation, and platform risks. To start investing in real estate crowdfunding, beginners should research various platforms, consider the minimum investment amount, and diversify their investments across multiple properties and locations. 5. Forex trading. Forex, foreign exchange, trading involves the buying and selling of currencies. The primary benefit of Forex trading is the potential for high returns due to market volatility and leverage. However, the risks include significant potential losses due to leverage, market volatility, and a steep learning curve. To start investing in Forex trading, beginners should choose a reputable online broker, learn the basics of currency trading, and practice with a demo account before investing real money. In conclusion, the internet has opened up a vast array of online investment opportunities, each with its own unique set of risks and benefits. To start investing online, beginners should carefully consider their risk tolerance, research the different investment options, choose a reputable platform or broker, and diversify their portfolio. With proper research and risk management, online investing can be a rewarding and profitable endeavor.